Imagine walking into your local grocery store and noticing that the shelves are emptier, prices are higher, and some of your favorite products are missing. You might think it's just a temporary supply issue, but what if this is part of a larger, more systemic shift? Today, we're going to explore how consumer behavior is quietly reshaping our economy in ways that most people don't see. In the past few years, households have been feeling the pinch. Prices remain elevated, and everyday costs are putting pressure on budgets. People often blame external factors like inflation or supply chain disruptions, but there's another layer to this story. Consumer behavior, how we spend, save, and prioritize our purchases, is playing a crucial role in these changes. This isn't just about individual choices, it's about how millions of small decisions add up to create significant economic shifts. To understand the current situation, let's look back at the COVID-era supply chain shock. When lockdowns began in early 2020, production and shipping were severely disrupted. Factories closed, ports slowed down, and global trade ground to a halt. This led to shortages of everything from semiconductors to toilet paper. As businesses struggled to keep up with demand, prices started to rise. But what many didn't realize was that consumer behavior during this period set the stage for longer-term changes. During the pandemic, consumers shifted their spending habits dramatically. With fewer opportunities to spend on services like dining out or travel, people started buying more goods, especially durable items like appliances and electronics. This surge in demand caught manufacturers off guard, leading to bottlenecks in production and shipping. As a result, prices for these goods rose sharply. The mechanism here is simple. Increased demand without corresponding supply leads to higher prices. The initial shock of the pandemic was just the beginning. As the economy began to reopen, businesses faced another challenge: uneven sector recovery. While some industries like tech and e-commerce thrived, others like hospitality and retail struggled. This created a two-speed economy where certain sectors saw rapid growth while others lagged behind. The contrast in recovery rates further exacerbated supply chain issues, as resources were diverted to more profitable areas. Let's look at some specific examples of how consumer behavior is reshaping the economy. 1. Online shopping asterisk. The shift to online shopping accelerated during the pandemic. E-commerce sales soared, putting pressure on traditional brick-and-mortar stores. Many small retailers had to close, while larger e-commerce platforms expanded their market share. 2. Housing market asterisk. With more people working from home, there was a surge in demand for suburban and rural properties. This drove up housing prices and led to a shortage of affordable homes in many areas. 3. Sustainability. Consumers are increasingly prioritizing sustainability. This has led to a rise in eco-friendly products and practices, which can be more expensive but also create new market opportunities. 4. Subscription services. The popularity of subscription services for everything from streaming to meal kits has changed how people consume goods and services. These recurring payments provide businesses with stable revenue streams, but can add up for consumers over time. To see the impact on a household level, consider the Smith family. They used to spend most of their disposable income on dining out and entertainment. During the pandemic, they shifted to home-cooked meals and online streaming services. This change saved them money in the short term, but also contributed to the surge in demand for grocery items and internet bandwidth. As a result, prices for these goods and services increased, offsetting some of their savings. One counterintuitive aspect of this shift is that while individual households may save money by changing their spending habits, the collective impact can lead to higher overall costs. For example, the surge in demand for home appliances led to shortages and price increases, which affected everyone, not just those who were buying new appliances. This demonstrates the complex interplay between consumer behavior and economic outcomes. So, what can we take away from this? Consumer behavior is a powerful force that can drive significant changes in the economy. By understanding how our choices impact supply and demand, we can make more informed decisions about our spending and saving. As you navigate the current economic landscape, keep an eye on how your own behavior might be contributing to broader trends. And remember, even small actions can have a big impact when multiplied across millions of households. Thank you for watching. If you found this explanation helpful, consider sharing it with others who might benefit from understanding these hidden mechanisms. Tags: consumer behavior, economic shifts, pandemic impact, supply chain, household spending. Small pressure that compounds is the one that matters most.